Did you know that Intel, the company that practically invented the modern microprocessor, was once the undisputed king of the semiconductor industry? Founded in 1968, Intel not only revolutionized computing but helped kickstart the PC era. In fact, for years, Intel was the most valuable chipmaker on the planet. But things have changed dramatically. Once an untouchable giant, Intel is now grappling with massive challenges, fierce competition, and a sharp decline in its stock price. So what exactly happened to this tech titan, and can it reclaim its throne? Welcome back to Dukascopy TV, where we help you make smarter investment decisions. Important disclaimer: Dukascopy TV is not an investment advisor. Before acting on any investment or strategy discussed, you should always do your own research and make your own independent decision. Now, back to the subject. Intel's stock has taken a huge hit lately. In fact, it's down more than 50% since the start of the year. For a company that was once the leader in tech, this is alarming. At one point, an investment of $1,000 made 10 years ago would now be worth about $900 when accounting for dividends, a loss of about 10%. But is Intel really on the brink of collapse, or is this just a rough patch? Some analysts argued that Intel is simply too big to fail. At around $19 per share, it was priced like it was headed for bankruptcy, which seems highly unlikely. After all, Intel is a key player in the US tech industry and even has government backing. In fact, Intel recently qualified for up to $3 billion in funding from the CHIPS Act, aimed at boosting domestic semiconductor manufacturing. So while the stock may not skyrocket to $50 or $60 anytime soon, it's hard to believe that Intel is going under in the foreseeable future. What do you think? One of the main reasons behind Intel's difficulties is its debt. The company currently has $53 billion in total debt, and although it holds more than $29 billion in cash, that still leaves it with a net debt of about $24 billion. While Intel has the ability to cover its interest expenses, it has still been burning cash. This adds a layer of risk because free cash flow is critical to paying off debt. One bright spot is Intel's recent partnership with Amazon Web Services. This multi-year, multi-billion-dollar deal is a big win for Intel's foundry business, which is a key part of its turnaround plan. Intel will produce AI fabric chips using its 18A process and a custom Xeon 6 chip for Amazon Web Services. This is a significant step forward for Intel, as it not only strengthens its relationship with one of the largest cloud providers, but also showcases Intel's ability to innovate. Is this enough to pull Intel out of the slump? Time will tell, but it's definitely a positive development that boosts confidence in the company's future. If you're interested in investing in commodities, stocks, crypto, indices, or bonds, you should definitely try Dukascopy. You can invest with just one click, starting with just $1. Sounds good, right? Simply scan this QR code or check the link in the description below to get started. Fill out the form and then make a video call with a Dukascopy operator. That's all you need to do to open your Dukascopy bank account. Your Swiss bank account with Dukascopy will be ready to use the same day. To address its financial struggles, Intel has been forced to take some drastic steps. The company announced it would cut 15% of its workforce, which amounts to around 15,000 employees. Additionally, Intel has suspended dividends and cancelled its annual innovation event to save cash. These moves are all part of a $10 billion cost-cutting plan, but they also signal that Intel is in serious trouble. On top of that, Intel sold 1.2 million shares of ARM Holdings for $150 million, indicating it's raising cash to shore up its balance sheet. While these measures might help Intel survive in the short term, they could also hurt investor confidence in the long run. So what's the balance here? Is cutting back on innovation and dividends really the right move? Even with its stock price down, Intel doesn't look like a bargain at first glance. Based on a discounted cash flow valuation, Intel's intrinsic value ranges from $4 to $21 per share. With the stock trading at around $20, there's not a huge margin for error. In other words, even after all the price drops, Intel stock isn't exactly cheap. Adding to the complexity, there are rumors that Qualcomm might be interested in buying parts of Intel's business. This potential deal would help Intel raise capital for its foundry expansion and simplify its operations. Qualcomm, on the other hand, wants to diversify beyond mobile chips and sees potential in Intel's PC chip design business. However, it's unclear if Intel would actually sell such a critical part of its operations. Intel's push into the foundry business is modeled after TSMC, which does not compete with its customers by manufacturing branded chips. If Intel were to spin off its branded chip segment and focus exclusively on fabrication, it could attract more business from companies like Apple, AMD, and Qualcomm, as it would become solely a manufacturer, not a competitor. But this would be a major shift in Intel's business model. Could Intel really transform itself into a fabrication powerhouse? This strategy could also help Intel secure more government incentives. as there's a growing push to reduce reliance on Asian manufacturers like TSMC, especially with geopolitical tensions rising. While these changes sound promising, they come with big challenges. Intel would need to scale up its manufacturing capabilities quickly and efficiently. Additionally, selling its branded chip business could mean losing a significant revenue stream, especially from its PC and data center markets. It's a risky move, but it could pay off if Intel plays its cards right. Intel is at a crossroads. The company has the potential to stage a massive turnaround, especially with its new partnerships and government support. But the path ahead is full of challenges. Intel's debt, slow growth, and struggles with innovation are all major hurdles. However, if Intel can execute its strategy effectively and attract high-profile clients, it might just regain its position as the leader in the semiconductor industry. What do you think? Is Intel still a good investment, or are the risks too high? If you like this video, hit the subscribe button and join us at DukascopyTV, your essential hub for all things related to the biggest financial markets from around the globe since 2008. Here we bring you diverse perspectives with our range of hosts and presenters delivering top quality content that's straightforward, independent, and without any ads. Thank you for watching, and I'll see you in the next one. Bye.